Oil prices are trending in a southward direction, closer to 2021 figures than to $75 per barrel. The figure Nigeria's 2025 budget is based on. At the current Brent price of $64 per barrel, the federal government's budget deficit is widening. What options exist for Nigeria in 2025? This is Economy and Market, where we give you a comprehensive breakdown of market and economic activities. I am your host, David Olujimi. Let's look at the figures. The federal government's budget is based on an ambitious oil production level of 2.06 million barrels per day, with a benchmark price of $75 per barrel, essentially leading to a revenue target of 36.35 trillion and a deficit of 13.39 trillion. The federal government is also projecting an exchange rate of 1,400 naira to the dollar. What are the other projections of the budget? GDP growth at 4.6% and inflation at 15%. Audacious projections, but does the reality support this dream? Let's look at the reality. Oil price as of April 10, Brent crude is at $63 per barrel, earlier falling to below $60 mark this week. This is even as the supposed pause to OPEC cuts are yet to kick in. When those production cuts kick in, when those pauses kick in, oil prices is projected to come down even more. Nigeria's oil production, our oil production dropped to 1.465 million barrels per day in February 2025, the lowest since November 2024. Essentially, we are 600,000 barrels off the federal government dream. At this rate, we would have incurred an additional deficit of $2.63 billion or 3.68 trillion naira based on an exchange rate of 1,400 naira to the dollar. This reality begs the question, is the 2025 budget a bold vision or a fiscal fantasy? If OPEC's production cuts are paused and there will be a flooding of the market with more oil, as we know Trump has already said stuff like drill baby drill, which is one of his dreams for the presidency. Prices are going to dip further when those cuts are paused. So what does this mean for Nigeria? What not just the federal government but also the state government, as the bulk of these states have come up with budgets that are fixated on massive FAC allocations. Can they survive this onslaught? On today's show, we are tackling the elephant in the room. Are we heading into rough waters? It's looking like major budget cuts are on the horizon. And if there's one thing we know about Nigeria, I can tell you about Nigeria. Austerity cuts often feel like cutting off the nose to spite the face. Salaries may go unpaid, but somehow the shiny new Toyota SUVs will make the budget. New borrowings, but at what cost? Last year, the federal government borrowed massively and at rates we've not seen in a long while. We saw treasury bills rate go as high as 22%. That's for the money market instruments. Can we sustain borrowing at that level? We've seen rates come down a bit this year, but for the state governments that have come up with 500 billion, 1 trillion, 600 billion, 400 billion budgets, do they have a contingency plan, or they'll do what they do best in times like this? Nothing. When I mean nothing, I mean slashing salaries, suspending public works, not building any roads, schools, or hospitals, while financing the guest house in Abuja. My monologue may seem somewhat like a joke, but it's a reality we have experienced before. Or we may come to the economy side of things and say the federal government should adjust oil benchmark price to something like $65 to fit current reality. But how much jump in our oil production are we going to see? Can we get to 2 million barrels by June? It does not look viable. Political instability in the country's largest oil producing state has dented the hopes of more oil from some of these oil installations. Recently, we saw all our major IOCs exit the onshore scene with Shell, ExxonMobil, and Ajib, ENI, selling off their assets to Nigerian companies that are still trying to look for capital to infuse into those oil wells or into those oil fields to get them producing more. On the show this morning, we have Dr. Oluyemi Adeosun, the Chief Economist at BusinessDay. Good morning, Dr. Oluyemi. Good morning,
morning, David. Thank you for having me.
Yes, welcome to Economy and Market, your first time on the show.
My privilege and pleasure. I'm excited to be here.
Yeah, so we've sort of listed out the issues. What's your take?
All right. Thank you so much. The first thing I'd like to say is that, generally speaking, prices of commodities and products, including oil, is not consistent. And at different period for different reasons is subject to volatility. For example, two countries going into war with each other, especially if one of them is a major stakeholder, can trigger an increment in the price of crude oil. And also, on the converse, an action by any major global economic power like United States of America, or for example, the European Union or China, just to mention a few, can also trigger this decrease or decline in
Oil
price
prices.
of crude oil.
Yes.
Let me also add that other elements, for example, change in weather. So you will see that maybe during winter versus during summer, the prices of crude and the demand, for example, for gas varies. So this, what I'm trying to say is that fluctuations and volatility are natural occurrence in economics generally. And so when you have a benchmark, chances are you are doing an average. You will have factored in your best case scenario and your worst case scenario. Don't forget that there have been instances in this year when the government revenues were coming in at above the benchmark. So if things come to the benchmark or below the benchmark, at the end of the day, all things being equal, between January to December, what you'll be hoping for is that the average income hovers around the benchmark rate, given the surplus or the deficit, looking at the benchmark now. When I say surplus here, in this context, I mean looking at the days and periods you've sold above the benchmark versus the days you have sold below the benchmark. I know we are in April, just about 4 months into the year, and we still have like 7 to 8 months left. And we are not also sure that the current situations and dynamics that is causing a reduction in crude oil will persist till the end of the year. There are no guarantees or assurances. Don't forget that there are also high-level bilateral conversations between various countries and the United States and the different stakeholders, and then the international organizations like World Trade Organizations and relevant interested parties are within it. I'm saying this so that we don't necessarily enter into panic mode. Of course, that does not say we should not take certain actions and try to see how we can better position ourselves for shocks. Because if you are not prepared and you assume that things will recover in terms of pricing, will come up, go higher, and it doesn't, then you'll be in for a shocker. So we must have, what we call like shock absorber for the bumpy road ahead. That would be my opening comment.
So Doc, now, one question I have is the 2025 budget grounded in optimism or delusion? So the reason I'm asking this is because we are very far away from our oil production benchmark. So let's forgo the price of crude oil. setting a benchmark, setting an oil production level of 2.06 million barrels per day, it's an audacious move, considering that you are at a position where we are generating, or we are producing less than 1.5 million barrels. That is in real crude oil. Then when you add the condensate, the level goes up to about 1.6 million barrels per day. Do you think that it's a smart... Now the question is, does the government have a plan B if oil prices crash below $60? What do you think? Do you think there's any plan in motion or any alternative?
Okay, thank you so much. First and foremost, my professional view is that when government set the target of 2 million barrels per day, it was realistic. Why will I say it was realistic? The government had put, I'm using the word past tense now, certain machinery in place. And they were, for example, like just recently, see how the NNPC board was rejigged.
Yes, rejigged, yeah.
Now, certain machineries were put in place in terms of security for infrastructure, oil pipelines to secure the production, and engagements with the people in the oil and gas, were ongoing even from last year till now. So it just makes sense to anticipate that these strategic interventions and initiatives along the different value chain, from security to foreign direct investments to allocation of oil, and oil wells and so on, and encouraging people who are for one reason or the other stop production to go back to production, both offshore and onshore. It's from 1.5 to 2 million is not outrageous. You must aspire to do more. And don't forget that we have OPEC quota that we are not even meeting. And it's in our interest to boost this production so that we can have both an increase in volume and also benefit from any increase in prices. Now, if, for example, is dropping, if we had increments in volume, we will probably not be as worse off as it were if we have both a combined decline in volume and then a reduction also in price. Having said that, let me now go more in depth or direct to your question. You see, some of the issues are not independent, are not in isolation. So there are some things we should be doing irrespective of whether we have high crude oil prices, good volume or not. And that's the first premise I want to lay. You see, in economics, diversification is when you focus strictly and solely on oil and gas, yes, there are certain value chain in the economy that the oil and gas may not completely augment for. For example, let's go back. What were we into before oil and gas? Agriculture. We can even use revenues from oil and gas to strengthen the agricultural area. And of course, we can now extend it, for example, to manufacturing. Even the oil and gas, thank God for the Dangote refinery that came up. Even there are many more things we can do in the oil and gas instead of just focusing on exporting the primary crude oil. How do we focus on value add?
So,
having said that,
okay.
Yes, I'm with you.
Okay, so now the question I'm asking is the question I will ask is, when you look at the scheme of things, like I would like us to focus. I would like us to look at the reality of things. If we want to talk about agriculture's contribution or getting government earnings from elsewhere, particularly right now in Nigeria, government earning comes from oil and it comes from taxes. Basically, that's all there is, and we're talking of company income taxes, VAT, and the likes. So I'm just saying, let's look at the reality of things. What other steps, what other initiatives, what strategies can government put in place, like in the very short term? I'm not looking at the long term or the mid term. In the very short term, to shock, like a shock absorber. If, let's say, things go south with oil prices, like what happened in 2014, where oil prices went from 120 down to as low as 30. So what shock absorbers do you think that we can put in place right now in Nigeria?
First and foremost, don't forget that we are also there is the cost dynamics, government expenditure and spending, both on capital and recurrent expenditure. While for now, little may be done about the recurrent expenditure, except you are ready to take some drastic steps, for example, like embracing the Orosanye report and trying to see where you can cut down on excesses. But there are certain expenditures, for example, just to mention one, maybe foreign travels. There are things you can look at to say if it is not completely essential. Can we? So, but prior to now, the call for reduction in the cost of governance has been, on the front burner. But I think both at federal level, state level, and local government level, all the tiers of government, value for expenditure must be critical. Again, looking at tax, you see that the government, for example, there's a federal government, a body around tax or committee around tax trying to see how they can streamline things, but also importantly, trying to see how they can widen the tax bracket. There are still many people today in Nigeria who operate outside the radar, who are not paying tax, so to speak, because they are working in the informal space or informally, or who may be paying some form of tax, but not to the government, maybe to area boys,
yes.
and so on and so forth. So government needs more than ever before to tighten this and widen the tax bracket, bring in more people into the tax to pay tax, and also encourage organizations to produce more. So when you help businesses create a better enabling business environment, what happens is as business do well, do better, they pay more taxes. For example, as they employ more employees, that's more payees. As they do more production and sell more, more VAT. So we need to look for ways to stimulate local consumption. Further, see how we can reduce our dependence on foreign imports, especially for consumables. So the government needs to continue to sensitize Nigeria on the need to look inward. If there is a local substitute for something, both by the industry or by the citizens, let's look inward. That way, we'll also conserve on the request and the need for foreign exchange.
Okay, personally, I'm it's not like I'm not patriotic, but I'm not very optimistic about some of our realities in Nigeria. And one question I have is about do you think that Nigeria has the leverage? Do we still have leverage to borrow more? So from last year now, most of the other budget, the new budget that was made, the 6 trillion naira budget that was created by the president, that's by President Tinubu, was financed majorly from the borrowings of treasury bills and from all of those money market instruments, borrowed at very high levels never seen before in money market history. Do we still have that leverage, or you think that we are tending in the path of Ghana? So Ghana at some point started to borrow as high as 30% in their treasury bills, started to offer 30% in treasury bills until their lending bills got so high to the point where the government had to declare a default. They had to default to their local commercial creditors, and even now default to their Eurobond holders. Do we have that leverage to borrow more? For example, we are borrowing 13 trillion already, and I'll be optimistic and say maybe it's going to be 15 trillion that we are going to get to borrow, or 18 trillion we are going to have to borrow eventually. Do we have that leverage to increase our borrowing rate? What do you think, sir?
All right, thank you so much, David. With due respect to Ghana, the level of resilience of the Nigerian economy is not comparable
to Ghana's.
So we have a deeper bandwidth, and because of our population, our size, and also because of our history, the only thing that will now change here is that will consider alternative sources of borrowing. For example, maybe we will lean more to China, for example,
Okay.
as an example. And there are different ways with respect to this borrowing. You can structure your payment terms, your repayment terms, and so on and so forth. Don't forget that when you are borrowing, don't just look at the money. You can also look at, for example, project financing. So if what are you borrowing for? If, for example, you borrow for a train project, you can recoup the money from passengers who use the train. If you borrow, for example, for infrastructure like roads, and then you toll it. So the mindset of the government will, yes, as you are doing things for public good, you also be looking at legitimate ways from which you can get revenue and income. So more than ever before, we must also widen our revenue sources as a government. And you will see, David, that even before now, a lot of government services has already increased. Look, international passport, price gone, driver's license, school fees. So a lot of things you will see, and please, I will respectfully say that let's expect more of this. The prices of different government services
Government
will
services
go
will
up.
go up. Okay.
Yes, because government must stay afloat.
Okay. Okay.
And let me quickly add this in. You will see, for example, FCT, how they are now more aggressive with the collection of land
Of
use
land use
charges.
charges, yes.
Look at Lagos State. That tells you that all the different stakeholders, even though these are legitimate incomes before, but they are now more aggressive and assertive trying to get this income.
In addition to what you said, Nigerian Railway Corporation has been operating on a loss since the start of the Lagos-Ibadan Railway. So it is expected that it's projected, or we should expect price increases even in things like rail services, essentially.
Exactly.
So
Exactly.
finally, one question I would like to ask is about the state government. This 2020, from 2024 to 2025, we started seeing state government come up with audacious budgets. That's the word I'll use. Some of them having budget of 700 billion. I think that was from Akwa Ibom. Then we saw some states 500 billion and the likes. Basically, are we going to see austerity measures? Or if we're going to see austerity measures, are austerity measures the right move for states at this time? At this particular time that we're in, where we have some form of cost of living crisis and the likes?
So what I will say first and foremost, David, is that you will see that since the what's the word now? Since this what's this thing called? You know, when subsidy
Yes,
removal,
okay.
the revenue to states generally has increased on a
Increase,
quantum level.
yes.
And this is one of the reasons why that what of things that are translated to their budget going increasing astronomically. And you will see, for example, the state you just mentioned gets 13% derivation. So if you are now oil producing, you even get way more. In addition to this, you will also agree with me that even states also borrow, both locally
And
and
internationally.
they take state foreign loan. So what will happen is there will be increased focus on prioritization on projects.
Okay.
So maybe you can't execute 100 projects before.
You have to
You may
cut it
want to
down.
like defer some of the projects if there is going to be a shortfall on funding, or you will experience some of the projects or many of the projects experiencing delays, because if you are not able to mobilize the contractors or vendors, then the pace of work will slow down. Or you may see discussions with funders as to how do we restructure some of this loan. Or you will say, instead of doing 200 projects, which are the top 120, and we focus on them and get value for the citizens and for
So
the
thank you
economy
so
at
much,
large.
Doctor. We have to round up at this particular time. Thank you so much for your time on economy and market. We appreciate your insights. It's been an insightful conversation. We'll be back on Wednesday next week for another insightful conversation on economy and markets. Thank you and have a wonderful weekend.